Hey, what's up everyone, and welcome back. Today is Wednesday, March 12th. The S&P 500 was up 0.5 point today, Dow Jones was down 0.2, Nasdaq Composite was up 1.2%, and the New York Stock Exchange Composite was even. All right, in terms of our top strategies for today, it looks like expected return is pretty much running the board. There is one Sharps measure in there, but expected return is across the board the winner for producing today's return. If you don't know what I'm talking about, what we're referring to here are our test portfolios that leverage a consistent methodology but change the metric for stock selection. So it'll change the time period that we use for the returns, the metric used for stock selection, expected return, Sharps measure, trainers measure, and alpha, and then it'll test a variety of different quantities of assets. So you can see here primarily the winners today were portfolios with 20 or even 30 assets in them. So what you're looking at here is the market as a whole across the board for stocks that were picked with expected return was a positive day. And I know it was a mixed day out there for a lot of folks, especially people that are in technology. It was kind of a mixed bag. In this portfolio, we have Palantir and Tesla, both of which had a very good positive green day. So that'll bode well for our portfolio. But overall, a good day for expected return. In terms of highest volume, you can see a lot of the usual suspects again: NVIDIA, Tesla, the TQQQ, which is a technology-oriented ETF. That tends to perform pretty well. As well, you see Ford Motor Company, Palantir, Lucid Group. All right, so in terms of the biggest gains, so you've got EW Scripps Company up 43%, Servomed was up 161% today. Groupon, you're probably familiar with them. They were up 43% today. In terms of some of the biggest losses, you had Applied DNA Sciences, Health Ion Tech, Springview Holdings, and Solo Brands were out there as some of the biggest losses. I know, retail in general has taken a lot of hits lately in terms of a lot of store closings that have been announced. But another one that you see on here is the iRobot Corporation, which you'd think with advancing AI technologies that their technology that they invented, a few decades ago would be able to continue to advance and make them competitive today, especially in my opinion in relation to like logistics robots. But that's probably, maybe they're not focused on that. Their vacuums I've had for years, those work fine. All right, anyways, let's take a look at our trends. So today's return came in about 2%. If you joined me yesterday, you know that I rebalanced the portfolio, so this is a little bit out of whack. Today, it was really nice here. It was almost 70 degrees, so I spent a lot of time outdoors at a few different parks. I actually was trying to get away from this for a minute, so at some point this week, I'll jump in here and correct this. The portfolio right now is about pretty much even, because I had to add about $20 in order to get everything to balance back out, and I'm basically back at that value today. So not bad, when you consider over that 2-week time period that the S&P 500, 2.5-week time period that the S&P 500 is down almost 7% during that time period. So, that was helped out by 2 green days yesterday and today where, that helped considerably in terms of getting our portfolio back up to being even. But this result right here, I'll try to see what I can do tomorrow to get this corrected. I think we'll see a result that's pretty close to even, but, a lot of this is all about comparison, in comparison to some of these benchmarks. And when it comes to the S&P 500, if the S&P 500 has lost 6.5-7%, but your portfolio is almost breaking even, I know it can be frustrating that you're not seeing the value go up, but it is still nice that you didn't lose the 7% that everybody else in the market likely did. So just keep that as food for thought as you start to earn returns and you're thinking about, ways to compare it to what's going on in the market. The S&P 500 is sort of a general market indicator. The Russell 2000 might be another good one to reference, but then like the Dow Jones tends to be a little bit more focused on industrial stocks, and then the Nasdaq tends to be more focused on technology stocks. So once you kind of understand that, you can begin to see which sectors and which areas of the economy had a good day. But obviously, to go further than that, there are a lot of wonderful tech sites that are out there that can show you on a day-to-day basis the performance, by sector, by industry, so that way you can really grasp where the money moved and what did well for today. So, we coach here on our site because we it's custom and we can about these asset and portfolio grades and what comes with that. But just be aware that beyond that, there's a lot of really good tools that are out there that you can leverage that are graphical in nature. These show these different tree maps where you can immediately see which sectors or which industries in the economy did well for that day. And it's not always necessarily driven by a certain result within that industry. It could be driven by market behavior or certain announcements from the Fed or the federal government about different action plans that they're doing. And what you might see is a lot of the money on Wall Street moves to sectors or industries within the economy that are a little bit more safe based on these recent announcements. So, that's partly what we leverage these metrics for, is when you have something like a Sharps measure out there and you see that begin to pop, then you know that, okay, the more traditional investments is where the money is going versus something like expected return. This seems to be that, we've lost enough over the last few weeks in terms of this downturn in the market that this is just my opinion, but it looks like a lot of the big wigs on Wall Street are making bets that we might be at the bottom and we might be positioned for a turnaround, because when you see expected return begin to pop, that's when everybody is looking for that growth, that return. And usually people are oriented that way when the economy is growing or when we're hopefully at the bottom. We'll see. I don't know how this is going to go this year. I think it'll kind of be a mixed bag. But to me, that's how I read these test funds, and that's how I read the result for today, is just that, maybe Wall Street believes that we're at the bottom. Obviously there's still a lot of political posturing with all the trade talk and stuff that's going on, and that's going to continue to go on. But when you look at the money, I'm hopeful that the money says we're at the bottom. And, we'll see. You just stay tuned here over the next couple of weeks, and we'll watch this portfolio. If we are at the bottom, then I bet you this portfolio, it shows up 4%. We're really about flat. But it wouldn't surprise me if in the next few weeks we make 5 to 10% on this. Now, it's going to vary a lot over the course of this year, but it wouldn't surprise me based on seeing that behavior if the next week or two isn't in the green and positive, at least in comparison to how the last few weeks have gone. So, all right, that was all I had for today. What I'm going to do is outside of being outside today, I was also working on a new trailer that I'm hopeful to have out either Friday or this weekend. But what I want to do right now is the last one that I generated and created. It's a short little 30-second clip. I'm going to add it here to the end, and then be sure to just comment down below. Let me know what you think. I'm trying out a lot of different things this month in terms of marketing strategy and how to grow my audience on YouTube. So if you like it, if you like what I'm doing, please like the videos, share it, help spread the message and get it out there, because it helps me grow, helps me get out this message to more people. And then it also helps me understand and reaffirm that you guys like this, you like what I'm doing, and to create more videos and more content like this. So until next time, I'm Matt Franklin. Take care. Have a great Thursday. Don't go another day feeling like you're missing out on investing. With asset and portfolio grades, weekly research reports, and over 7,000 assets to choose from, our video training program, risk assessment tools, and the ability to try our methods and technology risk-free, learn what works and how to leverage it for yourself. Join today and don't go another day feeling like you're missing out on investing.